Hello students and welcome to the lecture. So students, as we know that we are covering the general awareness and basically what we are discussing on the static economics part, right? This is the topic what we are discussing about. All right. So basically in the static economics, what is the main thing which we should understand here is that the fiscal policy. Okay, the fiscal policy. All right. And prior to this, what we have discussed the monetary policy, or should I write down both here? This is the fiscal one. All right. This is the monetary one. Okay. So when we talk about these two policies, like fiscal one and monetary one, so most of the times and most of the places you will find out that basically we just try to get the information about it. All right, like which is the monetary policy, which is the fiscal policy, what are the implications, that's all. All right, we are in quest of that things which are inappropriate, not just because of the paper types but also because of the general understanding. All right, so what we have to do, we have to understand the phenomena properly, understand the phenomenons properly. And why I'm saying this, because the upcoming topics which we are going to discuss is just not only the matter of passing of the exam. You may pass the exam very easily, it's not so difficult, you can say. All right, but what will happen when you go there and you have been allotted in different departments and the other areas of the government or whatever you can say? So what is the main problem you face, that you find yourself way behind than the others, because those who will be ahead of you have understood the concept, and you, if you follow that approach, which you have been following or not, I don't know, but I'm assuming that you are following that. So what will happen with you, you will be a far behind them. All right, and how it is possible? Because instead of understand the concept, you just try to cover up the concept. All right, which you will take or keep in your mind for several months, several years, but eventually you will fool it off. All right, so basically right now what I'm trying to do, I'm not trying to recapitulate the things, or you can say recapitulation. I'm not going to do this thing. All right, it's a general practice what we are doing so far. All right, like always when we start the lecture, I say that first we have to recall and this all. All right, but here is then another thing which I would like to talk with you, is that we will first build up the concept. All right, or in order to build up the concept, what we do, we will grasp all the facts which we have covered so far, so that we could formulate a robust entity. All right, so basically if we start this building up, all right, so first of all we have to start with the monetary policy. All right, and there is the fiscal policy. Okay, so we know that the parent body in the monetary policy is the Reserve Bank of India. All right, in the fiscal one is the Ministry of Finance, right? That's all we know. All right, so Reserve Bank of India, if we talk about the primary task of the Reserve Bank of India, then it is a you can say banker to the government, bankers bank, and basically it is responsible to maintain the economic and the banking stability within the country. All right, because the banks are the custodians of the currency, and ultimately they have a vital role to be played in the Indian economy. All right, whereas if we talk about the fiscal policy or the Ministry of Finance, so the Ministry of Finance is basically the government's representative, or you can say it's also, you can say accountant type, munshi in Hindi you called it. Okay. So why I'm calling the accountant? Because if you assume a role of the accountant, then what the accountant do? Basically, the accountant manages the expenditure and revenue part and prepares a detailed report on this for the comparison. All right. Similar thing is done by the Ministry of Finance. All right. Ministry of Finance, being the accountant of the central government, under Article 112 of the Indian Constitution, they prepare the draft, which we call as a budget, and then the budget has been presented on the regular basis to the Indian Parliament for the discussion, in which they have planned the expenditure part, they have planned the revenue part, and all. Right? So it is the first thing. Like their parent body having the separate roles. Got it? Thereafter, what we have seen, the common thing which we have seen is that RBI using CRR, SLR, repo rates, OMO, open market operations. Okay. Cash reserve ratio. Okay. Statutory. Liquidity ratio. Okay. Repo rate. And what we have the open market operations. All right. These are the tools used by the Reserve Bank of India during the monetary policy. All right. When we come to the fiscal policy, basically what we have the various tools to be maintained of. Okay. Like taxation part, non-taxation part. Okay. Public debt and all. All right. About public debt, you haven't been encountered so far, but you will be encountered to this topic in this lecture. So these are their tools. Okay. Thereafter, if we talk about RBI increase or decrease the tools, means CRR, SLR, RR, and OMO, they generally increase or decreases as per the inflation or the deflation level of the country. All right. Whereas if we talk about the fiscal policy, then we have already discussed in the previous lecture about the counter-cyclic or cyclical. Right? Counter-cyclical. Okay. So we have seen that the fiscal policy too have been influenced by the inflation and deflation. How? If there is a inflation, it means that the money supply is over excessive in the economic flow. So what the government will do? Government will reduce the expenditure and enhances the taxation and the revenue part, so that the individuals, the households, the business corporates will have a lesser amount of money to be spent off, and ultimately a significant portion of the money supply will be cut off from the economy, and eventually the high prices or inflation level will be come down. Right? Thereafter, during the deflation part, when there is a deflation, it means that lesser amount of the money is being in circulation of the Indian economy or the economic part. So what the government will do? The government ultimately expand the expenditure and reduce the taxation on the revenue part, so that the individuals, the household, the business corporates may have a significant portion of amount to be spent off in the economy, and ultimately the money supply will be enhanced, and then we can see that there is a rising up level. All right. So this is the topics we have completed so far, we have seen so far. All right. And if we go by the map which we have been using since last few lectures, it's like the household, or you can call it as an individual. Okay. Thereafter, what we have the government. Okay. Then what we have the corporates and the businesses. All right. So these are the areas we have. Okay. So the first flow was like this. All right. And the second flow was like this. Right. That's what we have made. If we go by the first flow, then what we have discussed, that the household and individuals buys the goods and services of the corporates and the businesses. The corporates and businesses pays the tax to the government as the revenue part, and then the government spend it on the household and individuals in the form of salaries and welfare schemes and whatsoever. All right. Second part, what we have discussed, that basically the corporates and businesses provide these salaries to the individuals and household for their services. They pay tax to the government, and the government provides various subsidies and these schemes to the corporate and business. So this how the money, you can say, circulates in the economy. Okay. So now I hope that you have now mentally prepared for the upcoming topics we are going to discuss in this particular lecture. All right. So here we have seen that the monetary policy and the fiscal policy are interconnected with each other. All right. Because when we talk about the government expenditure, okay, when we talk about the government expenditure, okay, then we talk about the government's revenue. So we are living in a money oriented economy, right? We are not operating in a barter oriented economy. Got my point? We are living in a money oriented economy, not in a barter oriented economy. Okay, so eventually you can counter me, said the government will you can say enhance the revenue in the form of bonds, gold and whatever. Eventually the main goal is to liquidate them. Okay, suppose if the government has earned gold of rupees 5,000 crores. Okay, so right now the government may have the asset gold, but eventually they will sell it off and liquidate it in the form of rupee or the currency. All right. So basically they are dealing with the money. All right. So this is the fiscal policy, and whatsoever we have been discussing since starting is that monetary policy is dealing with the money, right? So eventually we are discussing in both of them parts, right? So that's the point I am trying to telling you. Got my idea? Okay. So now I hope that you have mentally prepared well. Okay. So now let's begin. Overview part. Overview part we have discussed. Government spending we have discussed. Taxation we have discussed. Deficits and the surplus we have discussed. Counter-cyclic we have discussed. Now what we are left with, the income redistribution, public debt management, long-term planning, political consideration, coordination and the summary part. Okay. So now in this lecture we will finish all of them. Okay. So let's begin. Okay. So this is the time we are going to see the income distribution or redistribution. All right. Basically, if we talk about the income, all right. So basically the first thing counters in our mind is the national income. Okay. And thereafter the per capita income. Right. This is the thing which counters in our mind for the first time. Like national income, then we have the per capita income. So what is the difference between them? All right. GDP, GNP and all these things. Okay, so basically when we talk about the two important areas, like first is the GDP, it stands for the gross domestic product, right? So it is basically the total valuation of goods and services produced within the country by foreigners or the individuals, you can say. Okay, suppose if this is the country, we have country name is A. All right, so whatsoever goods and services, suppose the 4 billion worth US dollar, 4 billion US dollars worth goods and services produced within this territory during the particular year, or we called it as a fiscal year. All right, so this is the GDP. All right, doesn't matter whether it has been promoted by the individual of this country or from the foreigner investors. All right, but the total value of the goods and services produced within the territory will be the part of the GDP. All right, whereas if we take the second example, it's a B part. Okay, so now is the concept of GNP. GNP comprises total worth of goods and services produced by the individuals of the nation. Now we are not including the foreign nationals, but we are only talking about the individuals of the nation. Doesn't matter within the territory or outside the territory. Okay, so you can say, suppose out of these 400 billions, 200 billions goods and services were produced by the individuals of the country. Whereas from the outer country, again, the 100 billion US dollars have been contributed by the individuals of the country. So right now, if you merge them, so total value you will get 300 billion US dollars. Okay, got the idea? All right. And the one thing you will compare it here is that GDP is always greater than the GNP. Please keep this thing in your mind. GDP is always greater than the GNP. Why? Because in this part, we are including the foreigners and the Indians also when we talk about the country's territory. All right. But when we talk about the GNP, then we only consider the goods and services produced by the individuals of the country, whether within the country or outside the country. All right. So this is the part of the GDP and the GNP. Similarly, the things is the national income. All right. So national income is basically the total worth of, you can say, income earned by individuals during particular period. All right. Suppose you can say, if rupees 1000 is the total income earned by the individuals, then this is the part of the national income. All right. But what is the per capita income then? What do we mean by the per capita income? So basically the per capita income is just a formula. You can see it here. National income divided by total number of individuals. Okay. So this is the per capita income. For example, if we say that we have assumed the national income is rupees 1000. All right. And we have the 100 people. Okay. So go by the formula. What we will say? The formula is national income divided by total number of population. All right. So rupees 1000 was the national income and 100 was the population. So every individual will get rupees 10. All right. So this is the per capita income. All right. So now the question is, why I tell you the national income and the per capita income and what it has to deal with this income redistribution part. Okay, so basically you can see it from here. Fiscal policy can be used to address the income inequality by implementing progressive taxation system that tax higher incomes at higher rates and by funding social welfare programs to support low income individuals and families. Okay, now this is just an introduction part. Why I have showed you, let me tell you here. That was the year 1961 when the Income Tax Act was launched in the country. All right, and many a times, most of you in the movies or whereas you have seen this, that the income tax will raid your house, income tax will raid your office if you earn this money on this, right? So what is the income tax? Income tax basically is a tax chargeable on the earning of an individual. All right, because the individual who earns the income by selling of the goods and services have used country's resources. Okay, so it is the payment which has to be given back to the company or the country, sorry. All right, so this is the income tax. For suppose if you are earning rupees 10,000 per month, for example only, so to earn this amount you have used the country's resources. So suppose you are entitled to pay 10% income tax. Okay, so that means that rupees 100 will be the deductible amount from this 10,000 in the form of income tax. All right, so this is the topic which we are going to start. All right, so here if we talk about the taxes, so there are so many type of taxes, because in the taxation part when we were discussing, I had told you that taxation are the part of which? Part of appropriation bill, right? All right, and the appropriation bill contains what? It contains the revenue portion. Why? Because the taxation is a revenue part. All right, whereas when we talk about the money bill, then the money bill basically deals with which? It deals with the you can say revenue or expenditure part. Why? Because it contains that how much amount has to be expended on how much things. All right, so basically this is the main scenario. Okay, so in taxation we have so many type of tax. We have the capital gains, we have the corporate tax, business tax, custom duties and all these things. All right, but because we are here talking about the income part, then we have three types of taxes we have to deal with to understand the phenomena. All right, so basically as far as the income tax is considered in the country, there are three types of taxes. First is progressive tax. Second is proportional tax. Okay, third is regressive tax. Okay, so these are the three type of taxes we have to understand here. Okay, so let's start with the first one. It is called the regressive tax. All right, so if we talk about the regressive tax, then suppose it is the percentage of tax applicable on valuation of goods. Okay, so you can say suppose this is the you can say floor bag. All right. And the floor bag is having the worth of rupees 100. All right. So on the valuation of this particular good, so if the regressive tax has been fixed as 10%. All right. So now you can see that 10% of 100 is rupees 10. Okay. So the individual who is buying this floor bag is required to pay rupees 110. All right. Because 10% is a regressive tax. Now, this tax is also called as a negative tax. Why? Because the low earning group people has to pay a high taxes. For example, suppose there are two individuals. The first one is earning rupees 1000. The second one is barely managing rupees 100. All right. Or 200 you can say. Now compare both of them. When they go and buy the floor bag, they have to pay rupees 110 because 10% is the regressive tax on the valuation of the goods. Alright. So if you compare this particular thing, then you will find the person who is earning rupees 1000 as an income could easily bear out the tax rate. Okay. But the person who is barely managing rupees 200 will not be, you can say, comfortable in paying rupees 110 as a tax. All right. Sorry, rupees 10 as a tax. All right. So that's why it's called as a negative tax. Why? Because the low earning group has to give out their significant portion of their income in the form of tax in comparison with the, you can say, high earning group people. Or for example, you can say that if we divide it like 10 divided by 1000. Okay. So only 1% of its income he has to pay as a tax. While if we divide it 10 divided by 200 into 100, then almost 5% of the income has to be given as a tax rate. All right. So now you can say that however the 10% has been fixed, but the portion of income vary. The higher one is paying less tax, only 1%, but the lower income earner was paying high tax 5%. All right. So that's why it's called the negative tax. Okay. Next was our proportional tax. Okay. So if we go by the proportional tax, then it is applicable to all without any discrimination. Okay, like you can say, we have fixed the tax rate of 10%. Okay, so how many individuals are there doesn't matter. All of them will have to pay the exact amount or exact tax amount to the government. Okay, so this tax is also not in favor of the low earners because eventually they will have to pay the significant portion of their income. Thereafter, to find out this kind of things and to resolve the problem, what we have implemented the progressive tax. Okay, progressive tax means basically as the income rises, tax slab rises. Okay, how? For example, if you are earning 0 to 2.5 lakhs, 2.5 lakhs to 5 lakhs, 5 lakhs to or 7.5 lakhs you can say. Okay, then 7.5 lakhs to 10 lakhs and all. This cycle is going on. Okay, so here you can say first is the 0% tax, then 5% tax, then 7% tax, then 10% tax. Okay, so now you can see when your income was lower, the tax slab was lower. When your income goes high, tax was high. Again goes high, tax was high. Goes high, tax was high. All right. So now you can say as the income is rising, the tax slab is rising. Okay. So that's how it is called as the progressive tax. Got it? All right. But now you can say as the income of the person will rise up, so he have to pay the higher taxes. So don't he try to cut up the tax? He will eventually do it. All right. So to solve these problems, what we have made, suppose this is the graph. Tax rate, income. So the graph is like this. Income rises, tax slab rises, income rises, tax slab rises. But after a certain period of time, the tax rate was fixed. Okay. So that's how you can see that in the initial states, as your income rises, your tax slab was rising up. Okay. But after a certain period of time, doesn't matter whether your income is rising up, you have to pay the fixed tax rate. All right. So this is how the system of income redistribution and the taxation parts do. Okay. So government implemented progressive taxation systems that tax higher incomes at higher rates and by funding social welfare programs to support the low income individuals and families. Okay. That's why we do not put the proportional tax and the regressive tax on the individuals. Thereafter, what we have the public debt management. And what do you mean by this? Basically, government may borrow money through the issuance of funds to finance budget deficits. All right. Managing public debt is an essential aspect of fiscal policy to ensure that the debt remains sustainable and does not become a burden on future generations. Okay, come back to the topic. This is the expenditure part. Okay. And this is the revenue part. All right. Got it. So suppose the expenditure was rupees 40,000 and the revenue was only rupees 35,000. It's crores. This one was also crores. Just go by this solution. 40,000 crores, 35,000 crores. All right. Now, how much deficit is here? Rupees 5,000 crores. Okay. It means that the government is required 40,000 crores. But the only available money in the revenue is 35,000 crores. They are in shortage of the 5,000 crores. So, to fulfill this 5,000 crores, the government will borrow it. And in the previous lecture, also I had told you that there are two sources of borrowing. Domestic source and the international source. Okay. In domestic source, basically we have the two main sources. First is the central bank. Okay. Second is the, you can say, money market. What do you mean by the money market? We will have the discussion on this in the upcoming lecture. All right. Whereas, when we go by the international source, basically we have World Bank. Okay. We have the International Monetary Fund. Okay. And we have the other members bank like the ADB, Asian Development Bank, Asian Infrastructure Finance Corporation and whatsoever. All right. And when we talk about the other part is the foreign governments. Okay. Like the governments which are in surplus of the amount, they generally grants a loan to the other countries which are in shortage. All right. So these are the two sources of the government borrowing part. And for the smooth functioning, what we prefer, we basically prefer the domestic sources. Why? The sole reason is Because when we borrow from the domestic sources, the country's rules and regulations could be applied on them. So first is the favorable terms. All right. The loan, or you can say the funding from the domestic sources, is on the favorable terms. All right. But when we compare it with the second point, I thought that I had forget it. The second is the high interest rate. Okay. So when we go with the foreign international sources, the first is unfavorable terms, second is the high interest rates. All right. They charge more in comparison with the domestic sources. So what we generally try, we try to fulfill our demands from the domestic areas only, so that the managed public debt could be managed enough, and you can say ensure that the debt remains sustainable and does not become a burden on future generation. All right. Let's see it. So basically, fiscal policy can also be used to support the long-term economic goals and priorities such as investment in education, healthcare, research, and development infrastructure. Okay, like if you look at these sectors are basically the sectors which could not be developed enough in a short duration. You could not develop in 2 years, 3 years, 5 years. All right, you required them to be funded off for 10 years, 15 years, 20 years. All right. So fiscal policy could decide that whether the government will sustain to funding them in a proper way or not. All right. Suppose you can say the government has borrowed enough, the government has spent it the money on the useless things. So the government will be in underburden of the things to be disposed of, so that the government funding won't be available in adequate terms to these areas. All right. So what the government try to manage the other areas and that area, so that the equal approach could be brought off. Thereafter this, what we have the political consideration. Okay, like fiscal policies decisions are often influenced by the political considerations, including the government ideology, public opinion, and the electoral cycle. Okay, like the whether the government wants to spend more or not, it's an individual ideology. Sorry, public opinion. There is a high demand of cut down the taxes, or there is a high demand of increasing the investment of the government. All right, and the electoral cycle. Like if the elections are near, the government generally launches so many projects. Okay, so the expenditure goes up. When there is a non-election phase or after the election phase, the government generally moderate the expenditure. All right. These factors can affect the timing and nature of the fiscal policy changes, as I have told you right now. Okay. Thereafter, what we have the coordination part. Okay. Fiscal policy is closely related to monetary policy, which is controlled by the central government. Central bank, not government. All right. We have just seen it in the beginning of this lecture also. Effective coordination between the fiscal and the monetary policy can enhance the overall stability and the performance of the economy, because right now both of the organizations are dealing with the same thing, which is the money oriented economy. All right. And this money is basically deals with the inflation and deflation. All right, which is responsible for the economic growth and the recession. All right. So now what we are only left with the summary part. Let's finish it soon. First point is that it is important to note that the fiscal policy, while a powerful tool, also has limitations and challenges, because we have to see in the current situations, we have to see in the public opinion. All right, another part. Public opinion you can take. Suppose the government wants to expand more, so that they will try to increase their revenue. It means the taxation part. But right now the public have been frustrated with the taxation policy. They want the taxation to be cut off. All right. So the government eventually has to reduce the revenue. However, the fiscal deficit will be grows up. But what you can do? You have to go by the limitation and the challenges. All right. Implementing appropriate fiscal policies requires careful consideration of economic conditions, potential consequences, and the need for the sustainability. Additionally, the effectiveness of fiscal policy can vary depending on the specific circumstances of an economy and all. Alright, so students, with this, we have finished the fiscal policy part. In the next lecture, we will begin with some another important topic. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the other lecture. With this note, let's end this lecture and say thank you.